Hello again, everyone. This is Joe Henches with Beyond the Chart, and this is technical analysis of the stock market today. Today is Saturday, January 10th. We're going to take a look at the market like we usually do here on the weekend, which means daily and weekly charts, indicators, ETFs. We're going to take a special look at the US dollar index versus oil, and then we're going to look at YELP, NXPI, semiconductors, and AMBA. Okay, starting off here with the Dow. I've got all three. I've got the Dow, the S&P 500, and the New York Composite here in this window. I've got the daily across the top and the weekly across the bottom. So the Dow weekly, or daily, you can see, again, we've talked about, how we're working, possible, ending 5 here, although the alternate count is this was a wave 1, a 2, and we're working some kind of 3 to the upside, or this could still be a more complex 2. But we'll find out soon whether we take out this point or we take out this point. And if I blow that up, I'm talking about, do we take out this low right here on the 6th, or do we take out the low on the 26th? Those are our two pivot points that we're looking at, and we're basically halfway in between. If you look at the week, basically we started off, we had a couple really big down days, especially on Monday, and then it ended up for the week that we were down 95 points. So we had this Wednesday, Thursday, and then we sold back down on Friday. Now, the interesting thing that I'm seeing here on the New York Composite, on a weekly chart, these things look about the same. Big range expansion to the downside here and still closed down. So that's kind of got my attention as I look at this. When I look at the New York Composite Index here, it's kind of interesting because look at the daily bar, okay? A higher high and a lower low, all right? We opened above the high on Thursday, and then it sold off. And then it closed down, and it closed down more than half of the body of Thursday's trading range. Here was the open on Thursday, here's the close. And we closed down well below that. So what I call this is an outside down day. So you look back and say, well, okay, here was an outside down day, but it really wasn't that kind of bearish engulfing. And this wasn't totally engulfing, but not the same kind of bearish scenario. This is a doji, kind of a sign of indecision and pause, and it turned out to be the bottom of that move. But here is more of an outside down day, similar to what we have here. Although it didn't open above the previous day, but still it was a higher high, higher low, and substantial close down below the opening on the day. And when we go back, and I'm glancing back, I may miss 1 or 2, but here's another one right here. Here's one right here, and here's another one right here. So when I look at the trading of the New York Composite, I find 1, 2, 3, 4 more bars that are very similar to the action we got on Friday. And after every one of those, there was further sell-off of several days. So it'll be interesting to see if that's what we get here or not. Again, we're always looking for clues, always looking at patterns, trying to see what this market's telling us. Okay, now we're looking here at the NASDAQ and the Russell 2000. So we got the NASDAQ here and the Russell 2000 here. Okay, daily, weekly, daily, weekly. All right, so let's look at the daily across the top here. Again, when you look at the NASDAQ, the bar is kind of the similar type thing as the New York Composite. Higher, opened higher above, comes on down, and closes in a down scenario and below the middle of Thursday's range in terms of where it closed. So that looks kind of bearish to me in terms of that type of price action. The Russell 2000, a similar type thing, but we didn't get a close. We didn't get an opening above the high. It was right at it, and slightly lower. So not quite the same scenario. Weekly, they're all looking about the same on the weekly, although the NASDAQ's a little bit more of a doji bar in here. And let's see, now we want to take a look at our indicator. Okay, so here on the left we got the short-term trading index, and basically you can see the blue line is still stuck right here in the middle, right about the 1.2. The trend or short-term trading index closed 1.46 on Friday. Popped back up, because again a little more of the selling was going on Friday, down 170 points on the Dow, and the VIX came back up. So it opened down and then rallied up like this, and then sold off some. Okay, but ended up for the day, up 0.54 points at 17.55. So we'll see. It's hard to tell what's really going on here. It looks like it's, I mean, this is an outside, I don't know if I'd call that an outside up day, kind of, up from the standpoint that it closed up from the opening, definitely. High-low indicator, the 121 is the reading right here. So you can see that, it's pulled back down some here. So 121 more new highs than new lows, even for a big down day on the market. And so we'll see what kind of action we get. These, I don't see us selling off dramatically further until, this, when the moving averages cross. Then I think, that'll show us something similar to what I was pointing out the other day, that it seems like when we've gotten those crosses on the moving averages, that's when it's a signal that, okay, yeah, we're getting more action to the downside. So we'll have to keep watching that, and it's not really telling us anything right now. Okay, now we're going to take a look at our key ETFs, and I call them key ETFs because semiconductors kind of hits the technology space, home builders is strong into the economy, and the financial sector, of course, is banks and insurance companies, etc., that drive the financial money in the economy. And so you want to see kind of how these things are working. The semiconductors has, on a short-term basis, been trending down here. A little bit of a zigzag. It's hard to tell. It may be doing some kind of flag. It's interesting when you look at all three of these. Look at how the home builders are pushing here. I mean, this really does kind of surprise me, although it's probably because the interest rates are so low. I mean, the long-term rates just keep dropping, and that's probably what's driving the home builders. But again, they're not turning down. I had a note here on home builders, and I'm trying to, okay, this is the highest close here on the home builders since June 5th, 2007. Okay, so almost, so what is this, 7.5 years. The highest close. So that's pretty dramatic movement that this has done, come back up. Now the XLF, the financial sector ETF, again, this is starting to look like it's kind of zigzag again, also A, B, C type of thing. We'll see whether or not it can hold in here. Let me open that up a little bit. Let me open this up. It's going to be interesting to see whether or not these lows hold this. And if they don't, then I think we'll get a move probably equal to this distance to the downside, and that'll start to take it down. So we'll be watching this pretty closely. Okay, now I'm going to take a look at the US dollar and against oil. Okay, so let me tell you what I've got here. This is the US 12-month oil ETF. This is not USO, and I wanted to go with, I think this is called USL or something like that. I can't remember, I don't have it in front of me, but this is the United States 12-month oil ETF. All right, so this is a little bit different in that when they buy the futures contracts in the oil in here, what they're doing is they're buying for every month for the next 12 months, okay? USO gets into this problem that they end up having with futures contracts in that they are rolling over into the next current contract, the next, constantly. So they've got this constant rollover issue that they're dealing with. And depending on whether, when they get into, contango on the futures contracts, it can create an issue, create a problem for them. And part of that's a reason why I was always, with USO, the price never was in relationship to where it was back in the peak of 2008 and the drop. And this one is more in proportion, let's say, okay? Because right back up here, let's look at the price on this 12-month oil, okay? Up around 89 at the peak. And that's when oil was $147 a barrel, okay, the peak price. And went all the way down here to a low of 24.12. So it lost 75% of its value. And that's really what oil did in terms of the 147, went to below $40 a barrel. And so where are we now? I mean, we got futures contracts at around 48 or so type of thing. And then, you know, remember how oil bounced back, I'm thinking of West Texas Intermediate, bounced back up around 100, and I can't remember how high WTI got. It may have gotten above 100 too. I know the Brent did. But so what's interesting is this percentage-wise shows that it got back up to 50, 51 in relationship to 89. So that looks percentage-wise like, you know, proportion to what the actual price of oil was doing. So the thing that is intriguing here is that the US dollar index broke out and rapidly went into a rapid ascent here right at the same time that oil was peaking, and then oil went into a deep decline. Oil bottoms at about the same time the US dollar is peaking, okay? And the same thing happened here. The US dollar, oil peaked when the US dollar was at its low, its post-financial crisis low, right in here the week of, say, I think it's May 6th, 2011. Okay, so it's really interesting how this is in sync with what's happening with oil. Now, oil is priced in US dollars. And so I don't think it's oil that's driving US dollars. It may be US dollars that's impacting the price of oil. And you know, the price of oil is dropping either because of the dollar rising and, you know, economic issues going on in terms of, you know, contraction, supply, demand, that type of thing. But it's interesting to see this kind of precipitous drop that's going on here in 2014 into now 2015, very similar to the precipitous drop that happened back in 2008. At the same time, we're getting a rapid acceleration in the US dollar, and we're getting that now. And this high, the high close on the US dollar, let me look at this real quick. And you can see this is on a weekly basis. I've got channels that have been in here on based on a daily chart. And so it's even rapidly accelerating outside that channel. But if you go back, and I have data, well, I guess I do have data back into the 80s. Now back here, the US dollar is extremely high. Why? Because of interest rates are through the roof, okay? And so the dollar was super, super strong. And then, you know, it came back down, it rallied back up back in here. And so now where are we in terms of this dotted line? Right in here. So we're right at about this peak that happened in 2005. Okay, so this is just wanted to zoom out to give you some kind of perspective on where we're at with the US dollar when we've got interest rates. I mean, the Fed hasn't even jacked up interest rates yet. Okay, and you know, we're at historic all-time lows on long-term interest rates. So this is it's going to be very interesting next couple of years to see how this all unfolds. Okay, so thought it was kind of interesting. Now I got this out of whack on the dates in here, but you know what I'm talking about on U.S. oil. So this is going to be the other interesting factor is we see these two things happening with oil and the U.S. dollar index. And by the way, the U.S. dollar index, what is this? What is the U.S. dollar index? It is the U.S. dollar against a basket of currencies, primarily like 56% of it's against the euro, then the Japanese yen, and the British sterling, pound sterling, and the Canadian dollar, and there's a little bit of the Swedish krona and the Swiss franc in there also. But the three big ones are the euro, yen, and British pound. So that's what's driving, that's what's in the US dollar index that we're talking about here. And of course, the euro has been very, very weak because Europe is really, really weak. So what's the one thing that's missing, that's not happening? Back here, the stock market was collapsing. So, you know, the stock market was collapsing when the US dollar was rapidly rising because it was kind of a safe haven into the United States. Well, we're getting the same kind of thing happening here, but the stock market hasn't collapsed yet. So these pieces of the puzzle are kind of interesting how everything weaves together. Okay, now let's, I think the next thing I want to take a look at is 3 stocks, YELP, NXP, and AMBA. Okay, here's the chart on YELP, and you can see I'm looking at YELP, NXPI, and AMBA because these 3 were the biggest percentage gainers of the 40 or so that I'm watching, and so you could see YELP, you know, had a nice move, but it basically was a doji bar. So, you know, it gaps up, trades up and down, and then closes right where it opened, and it's right at the 55-day moving average. So I can't honestly look at that and say, wow, that's a big bullish bar. Okay, so I don't know. We'll have to, you know, the trend on the 55 is still down, pretty strong. You know, this is trying to move sideways a little bit, but it could still just be kind of sideways choppy action. And I'm still not totally convinced that this fan line is not working. I'm still thinking that there's the possibility that, let me stretch this out, that could be exactly what's still going on, and we'll see. You know, we'll just see whether or not we get more of that. And actually, you can actually draw another one from the bottom here and almost straight horizontal across this one right here. It's almost perfect at the bottom. Getting support came in here. And so if you count the days, I counted the days. Let's say, for example, how many days did it take from the time you got the support here to the time it broke? And it was like 22 trading days. And so right now we are at 16 here. Okay, this is the 16th day after counting this turning point day here. So it's going to be interesting to watch YELP and see whether it turns back down, or if these moving out, if it starts to break up back to the upside. Right now, I think the jury is out on YELP. So let's take a look at NXP Semiconductor. Okay, NXPI had a really nice move last 3 days. You know, came off of this, what looked like it was, you know, starting to fall through the floor here. It got support right here at the 55, and then just rallied, boom, 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 and it goes right above this top here. And I actually was wondering whether it was going to roll over, but I wasn't getting strong divergence in here. Not anything I felt comfortable. There was a little bit of divergence here, but then this move had no follow through. And I think I may have tried to, I can't remember if I don't think I played it. I don't think I played it. And sure enough, then it snapped back. You know, and so, okay. And so, you know, now this kind of, you know, there was no reason to try to play this again because I didn't have any good divergence setting it up. And then sure enough, what does it do on the RSI? It breaks that trend line on this day right here. Let me show you. If I take the crosshairs and I put it right on that day, you can see that the RSI closed right here. And that's a break. And a lot of times that happens. I mean, you'll see that it's kind of interesting how a trend line will break on the RSI almost as a leading indicator to a certain degree of the stock price, which a little unusual, but it's kind of a neat feature that you know, you always look for on the RSI. So right now this is you know, pushing up into virgin territory, blue sky territory. It's not been up here. This back on out of this thing. You can see. I mean, this has been a really solid uptrend, and so, you know, looking for some kind of measurement to the upside, you might say, well, okay, we get a swing move equal to this distance kind of here up to the upside. Not sure, not totally clear, but you know, it's moving really nice at this point. I don't see, you know, I'd be looking for an entry point of some kind, but that's my take on NXP. So no suggestion or position there. Let's see, the last one we're going to take a look at is AMBA. And this is a semiconductor stock also. I wasn't really familiar with it. I had to check in, but I know that this is starting to be very actively traded. And again, this is another one that's been a beautiful trend. Look at the trend on this. This is all the trading I think I've got on it. And boy, it's just, and this is a semiconductor stock related to HD video on a chip and putting it in a lot of different devices and applications. So that's why I think this thing is really hot. Nice breakout here, nice swing move. This now, to me, this is your classic. If people talk about a cup and a handle, this to me looks like a classic cup and handle. Okay, this just looks like it. You know, it just came in here, had this nice pivot point here. You draw a trend line across, it breaks on up. My guess is that I'd be looking at this distance to go from this point here. And so let me measure that. Okay, so now I've measured it. I've got to look back. Let me get back out of this, get back to my mouse, and I'm going to shrink this down a little bit more. And when I use my little measuring thing on the screen I've got, which you can't see what I'm doing, 1.7, looks to me like this thing is going to move up around 70, 71 on a swing type move. So right now, real strong, nice impulsive move coming out of it. And look at the volume, well above 50-day moving average of the volume for the last 3 days, and especially on the initial breakout move. Nice volume, 4.0 million shares. So that's very, very nice. Okay, that's it for today. A lot to cover. We'll be back tomorrow. Actually, let's see. I'm going to try trade ideas tomorrow. We'll review the trade ideas we're in and see what we've got for the coming week. But I got to watch the Cowboy game first. Cowboys against the Green Bay Packers. Now, I grew up in Green Bay Packer land, but somehow I eventually became a Cowboy fan. And so this is just, and I know my sister is a Green Bay Packer fan, and boy, this is going to be a classic game. You know, undefeated on the road Cowboys against undefeated at home Green Bay Packers. And it's going to be cold. So I will get the video out, the update out on trade ideas later Sunday, late afternoon or early evening. So, all right, everyone, have a great weekend. This has been Joe for Beyond the Chart. We'll talk to you tomorrow.